Here's the numbers for Broadcom, $1.24, which is a beat on its bottom line. The estimate was for a 120 adjusted. Revenue of $13.07 billion, which did also come in higher than expected. Did it beat some of the more loftiest expectations out there? That will be key. Hock Tan, who is the CEO of Broadcom, some comments here in the press release. He talks about how the third quarter results really reflect continued strength in the company's AI semiconductor solutions and VMware. They expect revenue from AI to be $12 billion for fiscal year 2024, driven by Ethernet networking and custom accelerators for AI data centers. There's been some working estimates across Wall Street on that AI revenue projection, around 11 to over 12 billion. So that will be something that will be debated as well. He goes on to say that the transformation of VMware continues to progress well. That was something that Wall Street will want more clarity on when the company's earnings call begins at 5 p.m. Eastern. John?
All right, I'll take it, Seema. Thank you, Seema Modi. So, Stacy, we're going to go to you for those results because it was a beat, and it also, in terms of the revenue from AI, that's a raise to $12 billion for fiscal 2024 from, I think, previous guidance of $11 billion. Your thoughts?
It is, yeah. Look, I think it looks good, and the other, I know the stock's down a little bit, but the other thing important, I think, on the AI side is the margin guidance, especially the EBITDA guidance into Q4, looks pretty strong. They're guiding 64. The street was around 62.5. Part of the issue with some of the AI revenues, the custom chips that they're making for the hyperscalers, they tend to have lower margins. And so the margin guidance to me looks fine. So, I mean, we'll see what they say on the call. But at first glance, this looks decent to me. Again, the stock's down a bit. So, maybe the first reaction disagrees. But my first glance at this looks pretty good.
I'm looking a little bit through the lines here. Infrastructure software was expected to be at $5.55 billion. It's right about at 5.8 versus expectations. Infrastructure software seems to have performed better than semiconductor solutions. How do you feel about that?
Yeah, that may be part of what's going on here. So, I mean, one of the big questions is what does that AI revenue look like in Q3 versus Q4? They had actually guided for some lumpiness. And so they'll give us some of the segment numbers as we get on the call so we can see the different drivers of the semiconductor business. In general, though, and the issue is but they took the AI guidance. If it's weak in Q3 because AI is weaker, clearly it would be stronger into Q4 because of the overall raise. I would take that. I do think we need to wait for the call to see what's driving this on the semiconductor side. In terms of semis versus software, I'll be honest. I like the acquisition strategy. I like the software strategy. I still think that there is upside to VMware. That's the big business that they just bought as we go through this year and into next year. It's massively profitable business. I'll take it. I'll take it at this point. I think it's fine. And we'll see what they have to say.
But to put a finer point on what you're saying, some of the excitement around the stock as being an AI play is more around the semiconductor side than it is around the infrastructure software side. So if the infrastructure software side is what has outperformed in this quarter, and if, you said we don't know yet, we got to listen to the call, the guide being just about in line on revenue at $14 billion is because that core chips business and the AI portion of it isn't outperforming. That could be some of the cause of this initial reaction.
Yes, but they actually gave us the AI number, so they're taking that up by $1 billion. Okay. So if there's any weakness in the semi business, it would probably be the core business. The core business has actually been quite weak. They're not the only ones. It's cyclically weak. I think there was some hope that they had cut it enough. I guess we'll find out if they cut it or not. But I mean, that is not a structural thing. That will come back eventually. And if the AI piece is making up the difference, I think it's fine. That's been the story as we went through the entire year, by the way. The core business has been worse. The AI piece has been better. It's actually bridged things over. And they're one of the few semi companies that actually has not had to cut numbers as we've gone through this year because of the strength of the AI story.